I'm Corbett Wall with DV Auction, here with your cattle market summary for the week ending Friday, September the 18th. And it's going to be a week that a lot of us are going to remember for a long, long time, because it's the first time that we really got confirmation that this downtrend that we've seen in the cattle markets is more than any kind of a correction or just a moderation of the high market. It's a full-fledged wreck, and gravity finally prevails. Always. We've been flying off a high here for the last few years, and it's like, my favorite economic law there is when the town drunk knows that cattle are getting pretty high, it's probably time for them to go down. And I'm pretty sure that most all the town drunks in all the small towns know that these cattle have been pretty high for quite a while. So, we're probably due for a down. Of course, I did, and most of other type analysts thought that this market was sure going to ease off and continue to kind of moderate and get a little bit lower, and but sure be a lot weaker from maybe like a year from now or 8 or 10 months from now. But it's looking now, it's just going to stay with this wreck right now, and it doesn't look like there's going to be anything to prop it up, and maybe a year from now is whenever we see the climax of the down market. But it's sure weak right now, and it's just nothing really to give you an idea that it may get any stronger. Your board was a wreck this week. Your feeder cattle were nearly $8 down for the week. And that's quite a bit when you figure in there is daily limits there, and I don't think it ever actually hit the daily limits, but was right in there flirting with them and down every day. On Friday, here's September, feeder cattle down 40, closed at 192.80. It hadn't been that long ago, folks, that feeder cattle were up in the 220s, 230s. Your out fronts on Friday were $2 to $3 lower, so there's nothing to make you think that they're going to have any support. Live cattle was $4, over $4.50 lower for the week. October on Friday was down 85 cents at 136. So it hadn't been very long ago the fat cattle were 30 cents higher than that. But it's just that we're in a real bad wreck right now. This pressure has culminated and been building, and we know that down the road that the supplies are going to get bigger. We know that there's been a lot of heifers kept back. We know that we're getting to the end of this supply cycle where our numbers are going to start to build back up again. But we haven't got there yet. We're not even close to it yet. We're just now getting to the extreme of our tight supplies. We've got fewer market-ready cattle available right now than any time in modern times. But it's just everything else that's gotten there. It started out with this extremely slow change speeds and tight slaughter that these packers have been running for months and months and months, and just a lot fewer cattle than what we're used to harvesting every week. And we've done that. Then it grew with the increased number of imports, especially ground beef product, lower exports. And that's because of the high price of our product, and also all the problems that we're having economically all over the world. Then it just kept growing and started to really head out with these heavy cattle that these corn belt feeders have produced. They've just got huge cattle, and they found it easier to just keep feeding the cattle that they had rather than to stay current and get rid of those cattle at a regular marketable weight and replace them with some more feeder cattle. But the feeder cattle were so high, they decided to just keep feeding the cattle that they already had, and they fed them into monster cattle weighing 16.5, 1,700 pounds. Is pretty common right there. That enabled the packers even more to slaughter fewer cattle to fill their needs, and really got us in a glut right here. Even though overall market-ready supplies are not that heavy down the southern plains, they're very current, but they're not able to take advantage of any of that. And probably the top reason and the final Jenga piece that pulls out of there that saw the whole thing fall is whenever these commercial feedlots, especially in the southern plains and Kansas and places like that, I'm not talking about your corn belt or your farmer feeders, but your big feedlots, they pretty much promised the rest of their show list from now to the end of the year to the Packers already. For the most part, they've done that, the lion's share of them. And it's some kind of a non-negotiated contract, so much over the board, so much over the weighted average price for the previous week or something like that. Well, that has absolutely taken all the leverage out of anybody that has cattle to sell, and we've just seen our market drop, several dollars every week. This week, your fat cattle $4 to $5 lower, from 134 to 136. Dress sales $7 to $8 lower, from 210 to 213. A lot of people thought we'd get in here over the next several weeks and we'd see a little bounce there, a little support because of the market ready supplies being so tight. Very doubtful that we'll see any of that. We might see a steady week here and there, but that's going to be it. No reason for packers to pay more money for cattle. They've pretty much got everything that they need already sewed up. The only people that they're negotiating with are your small independent farmer feeders up in the Corn Belt and stuff that's got 1,700 pound cattle, and they're basically having to beg for a schedule to get them killed. We're not going to see any support in the fat cattle market. So we're also not seeing any support at all in the feeder cattle market, especially as we get ready for your calf run to start. We're starting to see the calf run start this week a little bit, but we're still cleaning up a few of the true yearling feeders that we've got out there. Yearling feeders this week $10 to $15 lower, and I'm not saying in spots, I'm saying the full-fledged $10 to $15 lower. A lot of your big high volume markets, especially in the southern plains, on your 7 and 8 weight cattle, the weighted average price was almost $15 lower. That is just huge. And normally we cover our trends just on price spreads, but when your weighted average price is that much lower, that's just huge. If you look at your Cattle Market Central detailed quotes there for the last 7 days, just look how much ground was lost there in the last 7 days. If you go out in 7 days on almost all those weights, you see $10 up to $20, maybe $30 lower, and you can just see it slowly progress to lower till we get right up to current day. Look at some more markets on Cattle Market Central at Harriet, South Dakota, and that's one of the places where you probably see cattle overpriced as much as anywhere, as you get to see a lot of really top quality cattle, and you get some farmer feeder orders in there and some premium type orders in there. But you look there, they've got 4 loads of 8 weight cattle that are quoted there on your custom report, all weighing in the middle eights there, running from 194 to 199 and a quarter, and that's high. That's really high for this week. A lot of your 8 weight cattle aren't bringing near that. But I'm talking about a premium market up there with really top quality cattle and some farmer feeder orders, and that's all they can squeeze out of those cattle. Cattle on feed come out this week, or here on Friday. It's on feed numbers were a little bit, maybe slightly lighter than what they thought. At 103% of a year ago, the estimate averaged out to be 103.7. Your placements are actually pretty bullish, but there's way too much bearish pressure out there for this bullish cattle on feed placement number to really have a chance at all. But it come in at 95. The estimate was a little over 100, so that was a pretty bullish placement figure there. And your marketings are always pretty close to what they thought, but a lot less than last year. 6% down from last year at the same time on fed marketings. But on your calf markets, they were a ton lower too, mostly $15 to $30 lower. Your Southeast really didn't call them that much lower, but if you look at some of the prices, they're sure that much lower. But market reporters get pretty conservative and they hate to do that. And sometimes they don't recognize a wreck when it's right in their face, but we're in a wreck. A lot of your calves, $20 to $30 lower. I talked to some buyers this week that bought some real fancy all black 500-pound steer calves. Thought they might have to give $250 or $260 for them. They get them bought for $220. It's just that much lower. You look at Coffeyville, Kansas there, they sold 111 steers weighing 435 for $225. Now, a year ago at this time, those cattle would have been deep into $3. So some of these calf sellers that the cow-calf guys that brought their calves in to market them early here in the calf run are finding a rude awakening that their calves are worth a third less than what they were a year ago at this time. And if they haven't been paying attention, they should have talked to the town drunk, because he's probably heard that the wreck is on by now, but it's sure enough on. And that pretty much wraps up your cattle market summary for this week. Check out DV Auction for fall bull sales. Are really getting into high gear here this weekend here on Sunday. Conley Angus right down the road here at Clarksdale, Missouri, going to have a big fall production sale. But from my home office here in Maysville, Missouri, we'll talk to you next week.